Hey, it's Rick for Friday, November the 11th. Happy Remembrance Day or Veterans Day, depending on your domicile. End of an interesting week. So let's get our model here. Significant improvement in the model. We're now, these should be green, but we'll deal with blue. We're all up on all the moving averages except the big one, the 200-day. Still below that and it's still trending down. So time to get really aggressive? Not so much. For those of you that I suggested maybe 10 days ago or so that you get a toe in the water, maybe get 25% invested if you're a sector investor or if index investor. And I would stick with that, but I wouldn't, as we'll see in the charts in a minute. Right now, I wouldn't increase that exposure. There's still some risks, and I really would like to see these longer term moving averages and price turn positive. So S&P has had a nice move, and as we've talked about in the past, this declining 200-day moving average, I think, is going to be a fairly formidable barrier. But it'll be interesting to see how it handles it, whether it rips right through it, or we pause along here, or we roll over. Who knows? We'll find out when we get there. The Qs are a long ways behind that. They've really been lagging. We just cleared the 50-day moving average, so it's got a long ways yet to go, which if you're an optimist says, hey, there's lots more upside here until we get up here. Possibly. Small caps have actually got up to the and crossed over today the 200, so that's a positive sign. But this moving average is still trending down until it levels off, and then we only want to be in it when it's trending up, and I'm going to get to that in a little bit. And then Toronto is actually looking about the same as the small caps. Moving average still trending down. We had a bit of a red day today. You can see we came right up to the 200 and it just stalled out today. So positive signs, perhaps. Partially invested, okay. To go guns a-blazing, not quite yet. Somebody was asking me the other day, like, how much time should I be spending, or do I need to spend to, look at our portfolio or make decisions and what have you? And so if you're an index investor, I suggest that it takes you less than a minute a week. And if you want to do it every day, you could do it every day because it's so simple. And it would take less than a minute. And I'll show you what I mean here. So I have up here, I would just go off a weekly chart, and I can help you set these up on your broker platform. But basically, this is a weekly chart. The big magenta line is the 40-week moving average, which equates to a 200-day if you got a daily chart. And then the smaller red line is a 20-week moving average, which equates to a 100-day moving average. So we only want to be invested when these are going up. So this period here, we'd be invested, we'd be out. When we get back into here, we'd participate into here, and then we're out. And so really, I can't reiterate it enough. The only times you want to be in the market is when price is above the, in this case, the 20-week and the 40-week moving average, and those moving averages are moving up. When they start to roll over, it's time to get out and just stay in cash and just wait. So, good significant parts of the time, you're just going to be sitting waiting, as we have been for this whole period here. We have not participated. We should not have participated since When is that? That was since April of this year. And I think if you've been listening to me, or since I've been doing videos, or before that when I was doing the emails, said stay in cash. So anyway, so back to the point of view. So this is all you're really looking at when you do your weekly review or a daily review. So how is price today in relation to the 20-week and 40-week moving averages? And are those moving averages in an uptrend? So just how I would go through it, I have 5 indexes that I follow. I have the small caps, and actually the mid caps I would ignore. I've never traded those, and I probably should take them off my screen. So the small caps, the NASDAQ 100, S&P, and then Toronto. And so here's, if you have this set up on your broker platform, you have these set up in a watch list. This is all you really need to do. So click IWM. No, these things are headed down. QQQ. No, we're headed down. S&P. No, we're headed down, although price did touch it, so it's getting closer. Toronto. Oh, take this off. No, we're still headed down, but again, it's getting closer. So these would go on a little more of a watch list, and I'll pay more attention to them next week and see what happens in next week's bar. And that's the extent of your analysis. That's all you really need to do if you're going to be investing in an index portfolio instead of having mutual funds or SWAC of stocks or what have you. This is so simple. So that took, I wasn't timing it, but I'm sure it was less than a minute. So now let's expand it a little bit and say, what if we want to invest in sectors? Because again, the market is made up of a whole host of different sectors. And at any one time, some are going to be leading as opposed to declining. And so I want to maybe get a leg in a little bit early and look for the sectors that are outperforming the market. So again, I've got a list of the ETFs. These few here on the right are Canadian, and then all the rest are the US. The Canadian list is pretty sparse, but I would go through it exactly the same way, except here I would have a pen and pencil beside me, and I would write down the any that sort of look interesting. So let's just start with the bond index. No, thank you. Emerging markets. No, thank you. Not yet. Transportations, energy. Yes, it's above. So I'll write this one down, and we'll come back to it as to why I would discard this one, but write that down. Financials, getting close. This is turned up, this is still straight down, so it's got a couple more weeks to go. Gold, no. 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 It might set up in a couple more weeks, though, 2 or 3 weeks. This could be more interesting. Retail, no. No, but getting closer. Dividends, another couple of weeks. No. No. Okay, so that's it for Canada. There's only really one on the list. So the US, high yield bonds, nope. 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 Oh, Bitcoin, that's great. No, thank you. Nope. Corn, it was a yes, but I don't trade commodities. I don't think this is the right way to trade a commodity, so I would ignore this one. And then all these ones starting with an E are global equities. So this is Australia, and they're all going to look the same, and they're basically all going to be straight downtrend. Although they've had a big dramatic price increase in the last 2 or 3 weeks, but these moving averages are just going straight down. So we can discard every one of those. Actually, I'll scroll through that list. There's no need. IBD growth it's growing the wrong way. China, not looking so good. Gold miners, nope. Gold, nope. Clean energy. Put this on the list. It's starting to flatten out. It's going to look potentially in the next week or so. So we'll put that on the list. Nope. 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 It's getting closer. The big week this week. So I'll put that on the list. But I think we're pretty. This is straight down. No, that's not worth looking at. Not for another. It'll show up when we scan next week. No. No airlines. This is starting to flatten out. Yeah, put that on the list. This is getting closer. Regional banks. This is on the list. China, forget it. Pot stocks. Nope. Oil services. It's certainly above, but in my view, this is like way overextended. It's like way above these moving averages. So I'd want to wait 2 or 3 weeks or so, maybe a month, and if it pulls back into here and then starts to go back up again. But right now it's so far extended that the risk of a pullback is doesn't make this a good entry. Cloud computing, nope. Steel stocks, that just had a nice move this week, so we'll put that on the list. Semiconductors, nope. Social media, yeah, good luck. Oop, that's the S&P. Solar, possible, put that on the list. TLT is treasury bonds. Yeah, no, thank you. Oil, I never trade oil, so I don't even know why this is on my list anymore. Uranium. In the next week or two, this might be, I'll add it to the list to sort of investigate further. US dollar index. I think this is interesting as this is coming down. I think I mentioned this to people in a previous video. I pay attention to this because as this comes down, this is good for the market as a whole. Generally, the stock market rises inversely to this one. What I'm cautious about here is this is coming down, but it's coming down to a rising moving average. So it's highly probable we're going to get a bounce back up here. Depends how high, which means the market is susceptible to a decline over the next 2 or 3 weeks. So that's why I'm not too bullish in getting 100% invested right now. Home builders, no. Be really strict about this and look at these moving averages. We want to wait until they start turning up. And this one's up. Oh, this is energy. Yeah, so it's the same as the oil services. It's like so extended that it's just too much risk of it falling back. Financials. This 20 weeks turned up, so this is about to in it. So we'll put that on the list. This is turning up again. Industrials, XLI. Nope. This is possible. Consumer staples, XOP, real estate. No. Utilities, nope. XLV healthcare. This is flattening out now, and this is the shorter one's turned up. I'll put that on the list. Almost at the end. No. This is interesting. Metals and mining. Okay, and retail. So I don't know how many is on that list. There's probably 60 or 70. So we went through those in less than 10 minutes and refined this list. We now have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11 of them that warrant further investigation. So there's a little bit more work here to do. I would now go to a daily chart. So I'll get this weekly chart out of the way and have a daily chart. I'm going to amend my moving averages to have a 200 and change this one to be oops, that's just delete that one. Change this one to be a what do I want? 200 and 100-day moving average. It should be red, but that's neither here nor there. So now we picked out XEG. And we'll look at it in a little bit closer detail. And so it's substantially above the 200-day moving average and the 100. So this is energy. So yeah, there's too much downside risk here. I mean, it'd be natural for this to pull back here. So that's that would be a pullback to the 100-day moving average would be totally natural, and that's like 10%. That's just way too much for me. So I'll scratch that one. Jets. It's just come up to it, and this actually, when you look at this on a under a little bit more of a microscope, this is still down, so I would scratch that one. ARE. Okay, this is still down. It's you could argue this is flat. I would probably wait another 3 or 4 days. So I'm going to scratch that one. I'm pretty cautious. Steel, oh, it jumped up, so it needs to pull back, but I would watch this for a couple of days, and if it pulls back to this moving average is just flat, so it hasn't really started to curl up yet. Oh, this bar is going to help it. So this one's a watch, but it's not actionable probably in the next 2 or 3 days. It's probably going to take 2 or 3 more days to set up, but I would keep it on the list to watch. 10 solar. It jumped up. It's significantly above here. It came back a little bit today. I keep it on my watch list. The trouble is I see there's a lot of overhead supply out here, so it's hard to see this going up more than a couple of percent. So the risk reward just not there for me, so I scratched that one. Uranium is interesting. I would buy it. Let's see what if we bought it here at $22, which is just above the 200-day moving average, and we put a stop down here, would be one stop. That's like 7-8%. That's a little rich. And then if really the stop should come down under this bar here, and that's like 12%. So that's just too rich. anything more than 5-6% is a little rich for my blood, because if I'm going to risk 6%, I'm looking for at least a 2, if not 3-to-1 gain. So I'm looking for a 12% to 18% move. So we need to see this thing go to 18%. You know, that's a pretty big move. I'm going to pass. But I'd keep this one on the watch list, because maybe this will tighten up and we can get a better risk reward. XLF. And there's no rush to get invested. I mean, this is still in a downtrend, so nope. And this one just got extended. So it needs to come back a little bit. So nope. XLP was on the list. Okay, this is interesting. I had a red day today. This is still not in an uptrend though, but it's getting close. This would be a higher risk. So let's see what the stop would be. We entered at $74, let's say. We put a stop down here. Yeah, it's only 3%. So I would I'd take a shot at this one, I think, on Monday or Tuesday. And even if you want to take a bigger stop down here, that's only 4.68, 5%. So yeah, this one is 2 stars. XLV. This is up above. This is just curling up. Had a big red bar today, but if this can recover a little bit, let's see what the risk reward is. Let's say we pick it up, it goes back above this moving average here. So let's say 132 and change, and your stop is under here. It's 3%. So this is one I would definitely put on as well. It gets 2 stars. And XME is the last one. And this one looks interesting too. Again, if we enter somewhere around today's close, the risk down here, ooh, it's 8% just to get down to here. So just on a risk reward basis, this wouldn't do it for me. So after all of that, then we're down to basically 2 that I would consider taking a position in. So that's as far as your analysis goes. I don't know how long that took. That probably took about 15 minutes or so, but that's all you need to do once a week, or you could do this maybe twice a week, because you are looking at for some of the analysis, you're looking at daily charts. Then the only decisions you need to make are how much do I want to put into, if I'm going to buy it, how much am I going to put into it? How much of my portfolio am I willing to invest? And then where am I going to put my stops? And in this environment, I would say you don't want to be more than, if you're going to go sectors, you want to be maybe max 50% invested. So let's say you had $100,000 portfolio, and at any one time you could have 10 positions, each at $10,000. That would be a full position. But given the circumstances of the market, you really want to cut that down and say, I only want to be 50% invested. So now you got 50,000 that you want to put up, but you only have 2 candidates. So you could take 2 $10,000 positions. So you'd only be 20% invested overall, and keep your stops in the 3 to 5% range. But that's probably a topic of another video, or you can reach out to me for a little bit more help on position sizing and setting stops. But that's how I would manage it. Okay, that's it. Have a great weekend, everybody. I'm in Minerbini Master Trading course for all of this weekend and all next weekend. So gonna have busy weekends. Gonna hopefully learn lots and become more proficient and hopefully be able to pass some of this on to you as well. Okay, cheers. Have a good weekend.